Stop. 13,000 people are about to wake up rich. Not won the lottery rich. Generational rich. The kind of rich where your grandkids are still living off a decision you made years ago by taking a job at a rocket company and getting paid partly in something most people would have thrown in a drawer and forgotten about. In a few days, that drawer turns into a NASDAQ ticker, and the single biggest IPO in the history of the planet goes live. 13,000 people inside the building are set for life. The only question left is whether anybody outside the building gets a seat too. Whether someone like you with a normal income and a normal brokerage app can grab a piece of this, or whether you just watch it happen on the news, like every single time before. Because this time something is genuinely structurally different. And that difference is the entire reason you are here. Stick with me for 10 minutes. Here are 4 paths. One of them is wide open to you. SpaceX is going public at a valuation of roughly $1.75 trillion. Trillion with a T. $1.75 trillion is more than the entire GDP of countries like Australia or Spain. One company that builds rockets is worth more than most nations on Earth. The previous record holder for the largest IPO ever was Saudi Aramco back in 2019, and they raised about $29.4 billion. SpaceX is looking to raise roughly $75 billion. SpaceX is not edging past the old record. It is doubling it. SpaceX is reserving around 30% of this offering for regular retail investors. Not hedge funds. Not pension giants. Not Goldman Sachs' best clients. Regular people with regular brokerage accounts. How did the company grow so fast? At the end of 2024, valuation was $350 billion. Summer of 2025, $400 billion. End of 2025, $800 billion. Early 2026, $1.25 trillion. And now the IPO target, $1.75 trillion. In 18 months, the company multiplied in value by 5 times. Every single time it jumped, somebody on the inside got to sell some shares. That is not an accident. That is the machine working exactly as designed. SpaceX has somewhere around 13,000 to 18,000 employees, holding equity in the company roughly twice a year. SpaceX runs a tender offer. The company organizes a big buyback, where employees and early investors get to sell a chunk of their shares. It is a pressure release valve. It lets people who have been there for years actually touch some of that paper wealth, without the company ever having to go public. Picture a senior engineer who showed up early, took stock options instead of a bigger paycheck, and just held on. A half-forgotten drawer of equity is now worth around $4 million. That is not a fantasy. That is the median outcome for a senior person who showed up early, took the equity, and just held on. People who walked onto that factory floor in 2010, making less than they could have made at Boeing, are now on paper worth more than the doctors and lawyers their parents wanted them to become. The early investors. In 2008, SpaceX had failed its first 3 rocket launches in a row. Musk was nearly broke. A venture capital firm called Founders Fund, Peter Thiel, wrote a $20 million check into a company that had failed 3 times and was running on fumes. $20 million turned into the $19.5 billion. Their winnings on this one company are worth more than their entire fund, $17 billion. 62,000%. Google, Alphabet, invested $900 million in 2015. when the whole company was valued at around $12 billion. Alphabet's stake grew to a little over 6% of SpaceX, at a $2 trillion valuation. That 6% is worth roughly $100 billion. 900 million turned into 100 billion. Historically, about 90% of shares in an IPO go to the big institutions, hedge funds, pension funds, mutual fund giants. 90% straight to the club. The 10% that is left over, that is the table scraps the rest of us are supposed to fight over and feel grateful for. On the first day of trading, the stock often pops, opens higher than the price insiders paid. The average first-day return across thousands of IPOs, about 17.9%. The institutions who got shares at the offering price are frequently up double digits before lunch on day one, just for being in the club. SpaceX is reserving roughly 30% of the offering for retail investors. That is 3 times the usual carve-out, available through a handful of mainstream brokerages: Charles Schwab, Fidelity, Robinhood, Sophie, E*TRADE. But demand for this is going to be biblical. Supply is fixed. You might request 1000 word hand get filled for $200 or $50 or 0. Schwab has historically required a 6-figure account balance just to play in these things. Robinhood has rules where if you flip the shares too fast, you get penalized on future IPO access. So, trying is worth it. But do not build your whole plan around getting a meaningful allocation, because you probably will not. Path 1, the most exciting and the most disappointing. Request shares at the IPO price, $135 before trading starts. Through Schwab, Fidelity, Robinhood. You will likely get crumbs. Worth trying, but do not count on much. Path 2, simple. Buy on the open market as soon as the stock starts trading. Any brokerage account can do this. You want 100 OFSPC, you buy 100 of SPCX. But you are buying at whatever frenzied price the market sets on day one. And hyped mega IPOs love to pop and then sag. Easy is not the same as smart. Path 3, the most exclusive. The pre-IPO secondary market, Forge Global, EquityZen. But you need to be an accredited investor. Earn more than $200,000 per year, or $300,000 as a couple. Or have a net worth over $1 million. Not counting the house you live in. If you are not in that 18%, this entire path is legally closed to you. Path 4, the one I saved for last. Open to everyone. No income test. No $1 million net worth. No allocation lottery. Buy publicly traded funds that already own a piece of SpaceX. Alphabet, Google, owns about 5 to 6% of SpaceX. Buying Alphabet means buying a sliver of SpaceX, wrapped inside one of the most profitable companies in human history, with zero speculative markup. It is the least sexy way, and possibly the smartest. There is the ARK Venture Fund, SpaceX about 17% of the fund. But the fee is nearly 3% per year. And there is Destiny Tech 100, DXYZ. At the end of 2025. That fund's net asset value, NAV, was about 20 per share. Fundways trading gone to market at around 60 per share. People were paying 60 to buoy 20 of actual assets. That is like me holding a 20 bill. And you're handing me 60 for it. Because I drew a little rocket on it. That is not a bonus. That is a tax on your enthusiasm. SpaceX as a whole brought in about $18.7 billion in revenue in 2025. at a $1.75 trillion valuation. You are paying well over 100 times revenue. Not earnings. Revenue. On a bottom-line gut basis, the combined company actually posted a loss of nearly $5 billion. Morningstar ran their own valuation and pegged SpaceX's fair value at around $780 billion. Less than half the IPO target. Their analysts put it about as bluntly as an analyst ever does. The company has been significantly overvalued, and investors will likely get chances to buy it cheaper after the IPO settles down. Research shows 3 years after going public, nearly 2/3 of IPOs underperform the market by more than 10%. About 1 in 5 close below their offer price on the very first day. And those big first-day pops frequently give back 20 to 40% within a few months. As the hype cools and lockups start to expire, here is the lockup. A period, usually 90 to 180 days after the IPO, where insiders are legally barred from dumping their shares onto the market. When a flood of new shares hits the market, prices often dip. 1. You do not have to do anything in the next 4 days. The loudest voice in your head right now is probably screaming. If you do not buy on day 1, you will miss it forever. That voice is wrong. And it is expensive. Mega IPOs routinely give you better entry points in the weeks and months after the debut than on the frenzied first morning. Remember the lockup around December of this year, when insiders are finally free to sell big chunks of stock. A patient person watches and lets the hype buyers overpay first. 2. If you do want in, size it like the high-risk bet it is. A common guardrail. No more than 1 to 2% of your portfolio into any single IPO. Keep all your speculative IPO bets combined. Maybe under 5%. If SpaceX triples, 1 to 2% of your portfolio tripling. That is a genuinely great year. If it craters, 1 to 2% craters, and your life does not change. 3. If you genuinely cannot stand the idea of timing it, which, honestly, is a very reasonable place to be, because nobody can reliably time these things. Dollar cost average. Instead of agonizing over whether today is the right day to buy, you decide on an amount you are comfortable with, and you split it into chunks over time. A little now. A little in 3 months after the first earnings report. A little around that December lockup. You will never nail the exact bottom, but you will never get wrecked buying everything at the exact top either. The moment a company like SpaceX gets this much attention, the internet fills up with people offering you exclusive pre-IPO SpaceX shares, or some tokenized crypto thing that supposedly tracks the stock. If someone slides into your messages with an unsolicited SpaceX offer, the answer is no. Real access goes through registered, reputable brokerages. When something this hyped is in the air, the con artists work overtime. And fear of missing out, FOMO, is the single easiest emotion in the world to pickpocket. 13,000 people on the inside of that building are about to wake up set for life, and everybody else outside, watching through the glass. For your entire investing life, you only had the couch. This is one of those rare moments where the couch and the room are sitting a lot closer together than they used to. What you do with that, whether you sit tight, dip a toe in at a fair price, or just enjoy watching the most insane IPO in history unfold, knowing exactly how the machine works, that is entirely up to you. But now, for the first time, It is actually a choice. Here is what you will do right now. 1. Hit subscribe, because the algorithm will not show you the next video if you do not. 2. Write in the comments which path you would take. IPO price. Open market after the dust settles. Alphabet. Or the couch with a bowl of cereal. 3. Send this video to one person who says, "I always miss these things." Tell them. This time, the door is cracked open. Because 13,000 people knew. Now you know. See you in the next video.